Happy Wednesday and welcome, traders. I am Rachel Deschelle, your host for Trading Price Patterns and Senior Manager of Trading Services here at Charles Schwab. I am joined in the chat today by Mike Fairborn. Please chat in your questions, comments, requests during the session today. And please follow us both on X. I am Rachel-CS. He is Mike Fairborn CS. We post a ton of charts, a ton of market updates on there. And please give us a thumbs up to this button. Please like this video if you enjoyed today's discussion, and please subscribe to us on Trader Talk Schwab Coaching. Now, reminder, this is a webcast where we go through different concepts of price patterns. We talk about how to trade them, how to manage risk with them. So if you are pretty new to technical analysis, you may want to start with the Getting Started with Technical Analysis webcast first, but you are more than welcome to stay today. So get excited. I have lots of price patterns for you today. But before we get started, let's hop into those important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information we're going to cover here is for general informational and educational purposes only, should not be considered any type of recommendation or advice. And we're going to cover a few trades on the Paper Money software application today. Keep in mind that there are some differences between Paper Money and Live. Okay, now we are going to also discuss some upcoming workshops and market drive events. We just got done with an amazing one in Denver. Great turnout for that one. The mountains were pretty great too. Loved those views. But we have a couple coming up. Dallas Advanced Options coming up here in about a week and a half. Boston a couple weeks from now, and then Chicago is a market drive event. Keep in mind the Boston one is the technical analysis and option strategies workshop there. Okay, so let's go through our agenda today. We're going to start with our market overview. We're going to discuss our recent trades, discuss price patterns, place new example trades, and go through our trade management today. So let's start from the top and discuss what is going on in the overall markets, because there has been a lot of noise, a lot of headlines, a lot of excitement, so to say, but these are some of the levels we are looking at. So I left on the drawings from the past couple weeks class, and this is kind of the levels that we are looking at. So we broke through first with that 65.50. We retraced down all the way to that 63.50 level where we found long-term support there. Now, yesterday, we did have an exhaustion gap fill. Okay, so an exhaustion gap is typically a gap that occurs near the end of a trend and gets filled within a few bars. And so that's what we saw yesterday. We're seeing a bit more of the follow through today. So this could tell us, for right now, this is essentially a tradable low in this case, and price is making its way back above that prior resistance here. The next resistance on the horizon would be the 200-day moving average there. So you know the story. The tale is old as time. Old support turns, or I guess old resistance turns into new support. So that's kind of what we're seeing here. This was our old resistance. Now 65.50, that gap is going to become our new support, and our resistance is that 200-day moving average. Let's take a look at the NASDAQ composite. Similar thing happening here. You saw that exhaustion gap from the downside. You're seeing a continuation of that move today, back above that horizontal resistance, now new support. And you have the 200-day moving average on the horizon. That's going to act as that next level of resistance there. Okay, well, let's hop into a couple old trades that we had placed. One being Cloudflare. Okay, so NET. This was a trade where we were long the common stock here, and essentially we traded this double bottom. We had moved up our stop to the old breakout level, and what do you know, we got stopped out a couple days ago on this one for Cloudflare here. And then Dollar General is another one. So I'm going to pull up the trade that we actually had in Dollar General. We were long 4 puts of the 18th of June, 2026, the 135 puts. I took off half of the trade last week as we found a level of support at the 200-day moving average. So I'll show you exactly where we took half of the trade off the table was on this big red day where we broke through the 200-day. We still have 2 contracts left. We moved up the stop in this case. So we're still looking to ride out the remainder of this trend since we do have a couple months left on this option, but we do have a tight stop in place to protect any of our profits on that one. So that is the update on those. Now let's take a look at a few new patterns today. So I'm seeing a lot of patterns develop in the market. There is a lot of what would we say, bullish reversal patterns. So we're going to focus a lot on some of those today. And just like we've done in the past few sessions, you guys have provided some good feedback as far as getting through more chart patterns, more trades. So we're going to focus on the individual equity, just trading the underlying stock. Now you are more than welcome to use options to play out this bullish or bearish thesis when we walk through these price patterns too. So we'll talk about some of those strategies as we go. So let's start with APD. So this is a chart pattern. I'm seeing a couple different chart patterns here. If you guys want to throw in the chat the patterns that you are possibly seeing on APD, please throw those in there now. Let's see if we're kind of on the same page here. But essentially what we're looking at here is a big, large basing shape, basing formation. And we've seen that these highs of resistance right around $300 or so are acting as that blocker for us. So we have this massive cup, and then we have this little handle here. And the handle is actually forming a pattern in itself. You can actually see that it has the same level of resistance here that you're seeing on the cup, with resistance right around 300 or so, maybe even around like 296, 297 on this one. But essentially you're having higher lows with the price action as well. So you're seeing that price is getting more and more compressed, which is compressing the volatility, really squeezing out that price into this formation as it makes its way towards that resistance. And I see you guys are awesome. You guys are all seeing similar things. Someone saw a rising wedge. Awesome. And Mary, yeah, APD is a play on helium in this case. So if you guys want to dig further into the fundamentals, this is again more of a little bit of a like a commodity type of focus type of trade in this sense. But essentially what we're seeing is we're seeing 2 different things, 2 different ways to look at this. So we could look at this from a shorter term perspective and trade this shorter term price action and set up a trade on the shorter term. Or we could look at this short-term trade as a part of the larger trade setting here, which is a longer term price pattern here. So with a cup and handle, so that's what we're going to kind of focus on here, is this cup and handle formation, since the ascending triangle is essentially within that possible handle portion. With a cup and handle, you have a handle that doesn't retrace more than 1/3 of the cup. So that's kind of what you're seeing here. You're seeing a little bit of a pullback, and then is some of that a little bit of consolidation as price gets compressed there. Now, what we're going to do, if we're going to trade this cup and handle pattern in this sense, we're essentially going to measure the entire depth of the cup. And to do this, since the entire cup of this possible pattern takes up our entire 1-year time frame, we're going to need to zoom out a little bit, and maybe that'll help with the context of this price pattern to see where a possible level of resistance is. So let's take it one step further. We're going to back it out to the max weekly, and I'm going to zoom in here. Okay. So now you can see this pattern taking shape here on the longer term chart. So a couple different things that traders may do with a cup and handle pattern. So what we talk about a lot in this class, especially with patterns like this one, we are going to take the entire depth of the pattern. So from the highest point at the neckline or at resistance down to the lowest point of that pattern, and that's going to essentially measure the depth. And we know that markets love symmetry, so typically the same amount of time that it took to create this distribution, accumulation, and markup will likely be that measured move to the upside in this case. So we're going to take that measured move and we are going to project it to the upside here. And that's about a measured move of roughly $70. So that's quite a bit of a move. Now, if you guys want to be a little bit more conservative with a move like this, since it is a very deep type of retracement and recovery from this type of pattern, another thing that traders may do to find additional profit targets on the way up is potentially using the Fibonacci retracement tool. So I'm going to zoom back into here. I'm going to go to our Fibonacci retracement tool. And essentially what we're going to do with the Fibonacci retracements, now you can use this in other price patterns too if you ever want to take profit a little bit quicker than waiting for the entire measured move. Essentially what you're going to do with these bottom reversal patterns is you're going to take, in a downtrend, you're going to place one click or the start of the pattern at the highs of the pattern, and you are going to make the end of your drawing or that second click at the lowest point of the pattern in this case, okay? And once we do that, you can kind of see these clear-cut Fibonacci retracement levels. Well, one, you can see the retracement levels that it used to the upside as levels of support and resistance, and you can see here that even with that handle part of the pattern, it only retraced about 38.2% of that move to the 61.8% retracement level. So you see that. Now, the funny thing that we always chuckle about in this class is just how funny the math tends to work out. So when we take a Fibonacci retracement of that move, you guys can actually see that the 161.8% retracement almost falls right on the penny of these former highs. So likely that would be the level that a trader may look to take profit, the entire trade off the table, or maybe looking to take the majority of the trade off of the table at the 161.8% retracement there. So I have a couple different questions here on this one, and it looks like, let's see, it looks like we have a couple questions on using the bodies or the wicks. So this depends on your trading style. So we could use the bodies of the candle because a lot of technicians would argue that the close is the most important price. So using the weekly closes in that case, maybe using it that way. But a lot of technicians actually do use the wicks of those candles, essentially because that is the lowest part or the highest price that it traded. So that's measuring the entire depth of the move. So in this case, that's why we're using wicks in this case. Vic, I like your little joke there. Investing in helium will be laughable. No, too bad we don't have a little bit of helium today so you guys can see a really high-pitched voice. Let's see what other questions that we have in here. Let's see. Okay, nothing else in here. So let's take a look and possibly trade this pattern in the long term. Okay, so let's set up this for a long-term type of action. So what we're essentially going to do, if we're trading this from a long-term perspective, essentially what we're going to do is we're going to wait for that measured move or that percentage move break above that resistance line that we've talked about many times. So we're essentially looking for that 2% move above that initial breakout level. So if we just kind of take this and make our measured move of roughly 2% there, from where it could possibly break out from at 298.31 as our resistance. A 2% move beyond that roughly is going to be, let's see, let's do that measured move again. That's going to be roughly 304.69. Okay. And again, we're setting up this trade for the long term. Now, you may see cup and handles show up on shorter term charts. You know that these are fractal patterns. Patterns are fractal. They're going to show up on many different time frames. So if you're more of a shorter term, intermediate term trader, this may not be a trade for you. Maybe this is something where you're trading a little bit more long term in the long term trend in this case. So our entry would typically be right around that 304.69. That's because we're going to wait for confirmation. Now, that could be one weekly close above that level. That could be a couple days of closes above that level, or it could be just that percentage move, which is what we tend to stick with in this class with that 2% rule. And then as far as your stop, some traders may put their stop at the lower wick of one of these candles, or they may put their stop a certain percentage below that resistance level there. Okay, so in this sense, we're just going to put our stop at the low of today's weekly candle. Obviously, it's going to take a little bit of time for this type of trade to develop. So this is kind of one where we're going to set up a trade, show you the process for it, and then kind of sit and wait in this sense. Okay, so we're essentially looking to place our entry with a 2% move right around 304.69. Place our stop at the low of this week's wick, which is not complete yet, right around 284.41. Again, we can always adjust that. And then our upside is going to be 341.08, which is that 161.8% retracement of that cup and handle pattern. So we're going to set this up. We're going to go to buy custom. We're going to use this lovely custom template that we built here that does the math for us on our initial trade. So keep in mind that within this class, with an account starting with $200,000, the most that we are actually putting into the trade, our position size is going to be roughly 5% of our account. So that's why we're spending $10,000. And then our trade risk is roughly going to be about 0.5% to 1% of the account, so $1,000 to $2,000. So we may need to obviously adjust our stop there in that case to just kind of get a sense of where we could put our stop to still stay within our risk parameters here. So let's just put this on the entry. Let's change this entry order to a buy stop that says, hold on, wait until we get to 304.69 to even execute that type of order. So essentially, when the price goes to 304.69, this is going to become a market order. Keep in mind there are risks with those stop markets. There's no guarantee that you're going to get filled anywhere near the stop price. So especially if a stock gaps up, gaps down on the day, works in both directions that way, keep in mind that that's some of the risks with a stop order there. Now, the limit on the upside is going to be 341.08. So we're going to place that right there. 341.08 is our limit and our measured move to the upside. And I got a really good question here in the chat actually while we are building this trade. Coco Mar 2623 mentioned, hey Rachel, do you have an expectation of time before reaching the target? Let's talk a little bit about that, because we did mention how the market loves symmetry as far as price. Markets also love symmetry as far as time. So if this pattern started developing back at the beginning of September, and let's just say it completes by this month, that's roughly 7 months of time that it took to complete this price pattern. So that would tell us that roughly, not always, it's never a guarantee, but roughly it takes about the same amount of time for patterns to reach their measured targets or their measured objectives to the upside like this one. So again, there's no guarantee that price is going to go to the measured objective. There's no guarantee that price is even going to break out to the upside. But if we are waiting for confirmation on this pattern and using our rules, that is typically what we're using as a guideline. So we may have to wait quite a bit of time, which is why I said this is more of a long-term type of trade in this case for it to possibly reach there. So great question there. Okay. Now let's take a look at the downside too, because we talked about our risk in the account and we only want to risk $1,000 to $2,000. So if we are essentially investing or putting $10,000 into this trade, we're just going to do quick math. If we were buying the stock at 304.69, that would give us about 32 shares of stock there. So if we're trading 32 shares, let's do some quick math real quick to see if we need to tighten up our stop to the downside, because we talked about our stop to the downside being roughly around 284.41. So I'm going to make a note here on 32 shares. So our risk is essentially what we're taking is our entry price, which is 304.69. We're taking that price right there. And we're going to subtract our current stop price, or where we think we're going to place our stop, which is 284.41. Okay. And that's about $20.28 per share. So if we take that, multiplied it by 32 shares, that's still putting us still within our risk parameters of only risking on the downside $648.96, so roughly $650, okay? So we're still staying within our risk parameters there. So hopefully you guys understand how we calculated that. We do that quite a bit in this class. So that's what we're going to put onto the downside. We're going to place our stop right around that level, around 284.41 in this case, okay? Keep in mind the risks with a stop order. If the stock gaps down overnight, in that case, we're still sending that market order upon the open that next day. So again, no guarantee that the price is going to get, or the order is going to get filled anywhere near that stop price here, okay? So we have that all set, good till canceled. We are going to hit confirm and send and place this in our price patterns class. Okay. Everything looks okay. We're just double checking. We're reading the order back. Here we go. Okay. We now have our order in and ready. Okay, so that was more of a longer term one there in that case, but we don't trade too many cup and handle patterns. So I wanted to show you guys one of those, since we are seeing a lot of possible bottom reversal or bullish reversal type patterns here. Okay, couple other ones. We have a couple inverse head and shoulders too. So I'm going to pull some of these up on different time frames. So front line is one of them. I'm going to hide this 200 period moving average so we can look at this. Okay, give me 1 minute. Okay, now we can see it a little bit better. So we can see that front line if we just kind of piece down to the shorter term chart. Now this will show up on the yearly chart as well, but essentially we are seeing an possible inverse head and shoulders pattern here with this neckline resistance right here in purple, okay? And essentially what that neckline is doing is it is slanting to the downside. And we've talked about some of these slanted necklines in this class before, and we'll talk about this one yet again, but I just kind of wanted to show you exactly what we're looking at here. So we have resistance to the upside. We have the left shoulder here, the head, and the right shoulder. So those shoulders are roughly about the same height, roughly about the same amount of time So that's kind of one of the things that we look for in this class as far as looking for those inverse head and shoulders is roughly pretty close to identical shoulder width, shoulder height, and then typically that pretty straight neckline is something that we're looking for here too. And the reason why, again, this is a possible bullish reversal is because if we look at the trend leading into this pattern, the trend is down leading into this pattern. So we have lower highs, lower lows, and essentially that's what's carving out the first half of this pattern. If we just kind of split it in half, we're seeing lower highs, lower lows. So that is a downtrend. Then we're seeing a little bit of repair take place on the second half. And so we're seeing higher lows and a little bit higher highs from where we've seen. Or we're essentially, in this case, making kind of that same level of high, or in the case of a slanted downtrend here, making a little bit of a lower high. And so we've talked about this one before, especially when the neckline is slanted downward on the resistance. This is a little bit less of a bullish type of head and shoulder or inverse head and shoulders pattern. And the reason why is because on that flip side of it, on the second half of that price action or of that possible pattern, price is not reaching the same level of highs that it rallied into on that initial left shoulder and that beginning of the formation of the head. So you're still making a lower high there with these repeated taps to resistance. So this one, again, you may want to look for other measures of confirmation since it is, because of the slant of it, it is slightly less bullish. So that may tell us that, hey, we may want to look a little bit of a step further, maybe look at the volume to see if volume is even confirming this type of possible bullish reversal. So if we want to do that, let's take a look at volume, and I'm going to place that on this chart here, and we're going to look at equities, and we're going to show that volume subgraph. Okay, so let's take a look here. Now, what are we seeing here with volume? And now I know that this is showing a 90-day 4-hour chart. So you're going to have these little bursts, these little gaps in the bars just because it is showing the extended hours. So the bars in volume tend to drop off. But something that should remain consistent in that true, more valid, I guess it adds to the validity of a possible inverse head and shoulders pattern, is those increases in volume. And so that's what we should typically see when we see the formation of the left shoulder, when we see the formation of the head, and when we see that formation of the right shoulder. And so I'm seeing a little bit of a warning sign with this one. You guys tell me if you're noticing the same thing here in the chat. But essentially what I'm noticing is, okay, we have check one as far as increasing volume into the left shoulder of the pattern. So we do see that, but we don't see a notable increase in volume, I would say, for the head. And we definitely don't see an increase in volume for that possible right shoulder. We actually see volume start to drop off quite a bit in this case. So this kind of takes away a little bit of the validity of this type of pattern. But essentially what we can do in this is we could still maybe just tweak our entry and tweak our exit just a little bit on this one, because when we typically see patterns like this where they are a little bit more of a slant, so they're a little bit less bullish because of those lower highs, and they don't have the volume that we look for on a true inverse head and shoulders pattern, we may do one of a couple things. Our position size may be a little bit smaller. We may say hold off on that trade altogether, or we may also wait for a little bit more confirmation when it comes to a breakout, and we may have a tighter stop, because this could give us a couple warning signs that, hey, price may not even break out of this possible pattern, or price may have a failed breakout of this pattern in that sense as well. So again, we don't have a crystal ball. We don't know what essentially is going to happen with this one, but there's a couple different ways we can still be a little bit more cautious with this trade if we still wanted to take the trade. So on this one, we're going to go with a little bit smaller position size. We're going to wait for a little bit more of a move to the upside. And I think with this one, I measured a 2% move. We'll just kind of double check this. No, I measured the 3% move. Okay, perfect. So we're going to wait for a confirmed 3% move. So additional 1% than what we normally do in this class. Now, if you don't like to use percentages, maybe you wait for an additional close or additional couple closes above that level of resistance. And we're also going to have our tight stop in this case as well. So we're going to put our stop right around maybe this right shoulder. So right around this right shoulder here in this sense, okay? Now, where could we put our measured move? Let's take the low of that pattern, measure it to that resistance, which is about $7 there. And we're just going to take this to the upside and measure that, which is right around some of those highs. So our measured move would roughly place our profit target right around 42.79 and our stop right around 33. Okay. So a couple different things there. Okay. So we're going to take our front line, we're going to go to buy custom. So you guys can see I just clicked on the price there, went to buy custom with the 10K OCO. We're going to reduce our position size a little bit on this one. So we're just going to say, hey, we're going to do 7,500. I'm going to take it a little bit smaller, being a little bit more cautious with this one. And let's do the same thing we did before with our buy stop. So we are going to say stop, wait for it to reach this level with a 3% break. Again, waiting for that confirmation because a pattern is not complete until we have confirmation. So we are going to work with that 3% move. We're going to place our limit to the upside right around 42.79 and our stop to the downside around $33. Okay. Actually, we're going to do 32.90. We're going to make our stop a not a round number because sometimes the market finds those round numbers and can whipsaw out of us out of some of those trades. So we're going to place it just below, a little bit below that round number there. We're going to make these all good till canceled because again, this is a type of process where we are sitting, we are waiting. We do not know how long it's going to take for the price to get there if it does. But essentially, since this pattern started roughly about a month ago, we can expect that it may take roughly about a month in time for it to meet this measured objective, okay? Again, not a guarantee, but that is the process that we stick to because the market just loves that symmetry. So we're gonna start with this one, confirm and send. We're gonna place this in our price patterns class and we are going to send that one there. So you're going to see those triggers go off and it's just because it's doing the math for us on how many shares we could essentially buy. So that was about 213. Okay, so let's see if we have any other questions. Wiley, you're talking about the coaches writing a book. What is this? And that would actually be a pretty fun book to write, actually, if every coach pitched in and put a few tips here and there. That would be a fun little book. But yeah, maybe Scott, think about that for a project for us. We'll see. Let's see if there's any other questions here. A lot of Patron with $7,500. I bet you could buy a lot of Patron there. You guys are funny today. You guys keep things interesting for me, so thank you. Okay, let's look at a couple other patterns that we are seeing here taking place in the market. Pfizer is another one here. So this is another one where we're seeing a little bit of a cup and handle pattern. So we see this cup forming here where essentially it's similar to that one in APD where we have this rounded base really taking shape. Then we have the handle of this pattern. So again, a smaller type of rounded base or a smaller compression of price. And we see a breakout from resistance here. Now I drew this at a 2% move above that resistance level. So that's kind of where you're seeing that mark there is that 2% move. But let's just widen this out a little bit, kind of like we did on the APD chart, and show where price could essentially go with a cup and handle pattern on the long term. So let's back it out just a little bit, and you can see within the context of this one, why even more it is a possible cup and handle pattern, or I guess in this case, I guess pretty much almost a cup and handle pattern because we're almost to that confirmation for our percentage move. But essentially those cup and handle patterns, they form at the bottom of a market because they are a bottom reversal pattern or bullish reversal pattern. So you're going to see that downtrend really leading into that. You're going to have some accumulation happening over time, which gives it that rounded bottoming shape. And then you're going to see that breakout of resistance in this case. So that's essentially what we are seeing here with this one. You can, if you want to consider this entire base as the cup and handle and take this resistance all the way back to here, that also works as well, because you can see that there is a level of resistance that's been touched many times. But all throughout this, we see that price is making those higher lows and now just breaking out into those higher highs there. Okay, so if we're just looking at the short term, let's take that measured move of this short term cup and handle. I'm going to move this back over here so you guys can see that. And let's just take this measured move and see where it could possibly go to the upside. So I'm going to take the bottom of this base up to the high. And I'm going to remove this other drawing so it doesn't confuse you guys. So bottom of the base up to the high of the pattern. And we're just going to move that to the breakout point. Okay. And let's see where that lands us. Oh, would you look at that, friends? Okay, so we always talk about how we love math, and funny enough, we found a familiar level of resistance right around 31.62 at those former highs. So I'm going to place a little bit of a candle or a little bit of a price level on that one just to show where our profit taking could essentially be for Pfizer. Now, again, there's many different ways that you could essentially run with this trade, okay? So you got to look at the implied volatility environment. So look at the implied volatility to see if we are in an option buying type of environment or an option selling type of environment, because it determines on how you could essentially play out this trade with options. So one of the ways, selling a possible put spread, buying a call spread, going long a call. So many different ways that you could essentially play out this trade. But in this case, again, we are going to wait for, we are essentially just going to use our common stock to just show a simple way to play out this trade. Okay. So what I did here, we have our 2% move, we have our measured move to the upside, and then we took one of the lower wicks of the cup there on the weekly to use as our stop to the downside. Now, if you wanted a better risk to reward, you could essentially use the low of this possible weekly candle. The only reason I'm not using that is because the week is not complete yet. But if you wanted to piece it back down to this one, you can kind of see where I placed that possible stop at. So I'm going to formulate this trade for us, go to buy custom with OCO bracket, and let's build this trade on Pfizer as well. Okay, whoops. We're going to use our custom template, buy custom with $10,000. We're going to use our buy stop to say wait until price reaches 28.52, then send a market order. Our profit taking order to the upside is going to be 31.54, and our stop to the downside is 26.44 there. Okay. Now we're going to hit confirm and send. Everything looks okay to me. We are going to send this to our price patterns class there. Okay, so that order has been sent. I told you guys I had some bullish reversal patterns here ready for you guys. So those are a couple there. Now we don't have time to essentially trade any more price patterns, but just like how I always end this class with you guys, I am going to run through a list of possible patterns that you guys can keep on your watch list that are forming in the market now. So let's take a look at a few of those. Chewy would be one of them. So Chewy looks like it's possibly forming a double bottom pattern because we see two lows being met at the same type of level, and we see that price leading into the pattern is in a downtrend. So if the price breaks up above this level of possible resistance here, right around $28 or so, that will give us that confirmed indication that this is a double bottom pattern. And I put that 2% move right on that one as well. So this could be one that we may trade in next week's class. But that's one there, and you just kind of take the measured move of the entire depth of the pattern and project that to the upside. So that's how you'll get your measured move on that one. Similar one with this one as well. So Medline, MDLN, similar formation here, forming a little bit of a double bottom pattern where you see the lows crafting out roughly the same level. You saw a breakout yesterday. You saw that continued move today. You saw that it actually kind of break down a little bit, re-enter the pattern, but the bulls are kind of pushing that one back up. So a trader may wait for a little bit more confirmation or a move maybe above the high of today to look to possibly enter into that bullish reversal trade. Now, another one we have CoreWeave. So CoreWeave, we don't talk about wedge patterns too frequently in this class, but CoreWeave is essentially forming a falling wedge pattern. So this is essentially when price is getting more and more compressed, where the bulls are pushing the price up, the bears are pushing the price down, but they're doing it at different frequencies. And so you can see that these lines, they are not parallel. These lines are moving at different rates and speeds. So it definitely shows that the bears have more control in this sense because of just the velocity of this type of trend line to the downside, or the rate at which price is just getting rejected at those levels. And we can see it's making lower lows at kind of like a slower rate in that case. So a lot of the time, falling wedges do break to the upside. They typically are reversal patterns in that sense. But again, you'll have to wait for confirmation if you are looking to trade a price pattern in that sense. Another one would be AXP. On the shorter term, it looks a little bit like a triple bottom, definitely a range that's taking place there. You can see we show a 2% move outside of that range. And again, just take the depth of that range, project it from the breakout point. But typically, rectangles or ranges that form at the bottom of the trend are typically reversal patterns. But again, wait for that confirmation, whatever that is for you. And then what else? We have Citigroup. That was one of them as well. So this one is forming a little bit of a inverse head and shoulders pattern. You could see it on the 90-day 4 hours. If I back out to the daily, you can see that as well. With the left shoulder here, the head, the right shoulder, we are coming up right upon the neckline now. So again, just take that measured move of the entire depth, projected on the breakout point, and that will kind of give you that possible measured move there. So You guys, we're almost at time. I gave you a ton of different ideas, a ton of different price patterns. We went through some different trades today as we talked through the process, and hopefully it helped just to see kind of when you should be a little bit more cautious when you're seeing a possible pattern develop and using things like position sizing or putting a tighter stop or waiting for a later entry or using volume to possibly still help you in that trading process of a price pattern. So thank you all for your time. Thank you so much to Scott Thompson in the chat for helping us out. Please follow us both on X. He is Scott Thompson CS. I'm Rachel-CS. And please give this video a thumbs up for me if you enjoyed the content today. Help other traders find this video as well. And then please subscribe to us on Trader Talk Schwab Coaching. But thank you, everyone, and see you later, traders.